late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I'm going to do a video on Tesla. Whether or not you like Elon Musk or Tesla, all politics aside, I just want to take a look at kind of the fundamentals, look at the current valuation of Tesla as well as the forward guidance, and then take a look at the charts and see if we can find an opportunity for an entry there. Tesla is one of those Mag 7 stocks. They are one of the biggest EV sales in the world, so we can't discount them even as a result of kind of everything that's gone on lately. We don't pay attention to that. We're just here for the investment opportunities. I do think Tesla is going to remain a major player in the EV market, but that being said, there might be some different opportunities or some better opportunities to accumulate them at a little bit more of an undervaluation. So I just want to start off and talk here. First, we're going to talk about the current analyst forecast for Tesla. So basically, based on recent analyst consensus, we have a 12-month average price target for Tesla at about $335.32. So that's from 36 different analysts. We have another estimate that comes from 31 analysts suggesting an average target of $304. And then we actually have another one suggesting kind of a slightly higher figure up to about $366 per share. So given these figures, you could kind of take an average price of the three. You're looking for anywhere between $335 to $366 as that 12-month price target for Tesla. That being said, if the stock market is going to continue breaking down, I think most of these stocks are going to follow with it. So some of that upside may be a little bit limited. We might not get that full move to the upside if we get a larger breakdown in the stock market. So we need to continue paying attention to that. If the stock market and the NASDAQ continue breaking down, I don't think any of these names are going to stay safe. Whether they show a little bit of strength now and the market can kind of bottom and reverse, that's what I'm looking for. I want to see relative strength during times of weakness in the market. And then when the market looks bottomed, those assets that were showing relative strength during times of weakness generally go on to outperform. So that's where we're looking to kind of accumulate those assets. Just based on the current valuation right now, looking at a price to earnings ratio, it's hard to find an exact number. I basically have sources anywhere from 109x to 130x in terms of their price to earnings ratio. This is pretty insane when just comparing it to the auto industry average, which is 17.3x. Or it's got a peer average of 14.7x. So basically all the other automakers in the industry right now trading at below the industry average, closer to that 14.7x PE ratio, the average being that 17.3, and then Tesla being above 100x price to earnings ratio. There is some reasons for that because a lot of people argue Tesla is not just an automaker. They're a tech stock, they're an AI play. They kind of have they got their foot in a lot of different doors. So I do think they will be a big AI player going forward, which is kind of why I think it does make sense to value them a little bit more than maybe some of their peers. That being said, Nvidia's trading at a pretty crazy valuation and it's gone on this insane run. They're still only trading at a 37x price to earnings ratio. So and their sales are actually increasing, whereas we're starting to see Tesla's sales kind of decreasing and then that PE just climbing up and up. So it's a pretty, compared to peers, even compared to other AI plays, it's still pretty overvalued just based on that price to earnings ratio. So it's something to keep in mind when we're looking at the price. We see we're basically positioned right in the middle of our 52-week trading range. So, that's what I say. We're kind of in no man's land. The stock market's not showing enough strength. We're still in that downtrending price action on the higher time frame for now, waiting for confirmation. We're trading right in the middle of our annual trading range. So we're not looking to long and we're not really looking to short right now. We're just looking at opportunities to potentially accumulate. So we see a bunch of different analyst perceptions. Essentially, some people labeling Tesla as overvalued at their current levels due to that price to earnings ratio we talked about. There is a fair value estimate of about $210 as of October 2024. So if Tesla comes back to $210, that's right around the fair value. It might make sense to be DCAing there. That's actually almost right where we saw those lows come in. I think it was between $220 and $230. We'll get on the chart and see for sure. But basically you saw Tesla coming within that, within just a fraction, so a small percentage from that fair value estimate, and then catching a pretty good bid from there, getting a nice bounce up almost to $300 there. We saw that basically on the tariff news, because Tesla is a little bit more shielded from these tariffs than some of the other automakers. We saw Tesla up 8-9% initially, although that did sell off. They ended the day flat, so we kind of interesting to see, that bullish news and then kind of the market reacting positively. Elon Musk kind of came out and said that despite the fact that they do have a more favorable position than competitors, that tariffs are going to hurt them regardless. So it's just not going to hurt them as much as some of their other peers. So we saw like GM, Ford, some of these other auto manufacturers who have more kind of international based manufacturing subject to these tariffs getting sold off a little bit more. Tesla showing that relative strength there, so good to see relative strength. Basically though, we see other analysts seeing a lot of room for growth, and that's tied to that technological edge. So that high PE and market cap suggesting a premium, essentially driven by their valuation around their AI plays. They're looking at autonomous driving, they're looking at the robo-taxi, the Optimus robot, all these different kind of AI and tech branches going forward. That's what kind of some of these analysts are pricing in and why they have such a high price to earnings ratio. That being said, none of those are really material revenues at this point. So to price it in so high, it just makes me a little bit more cautious. It makes me not want to jump in when the technicals don't line up. That being said, anywhere, in that $220, $210, or even under $200, you might look to really start accumulating Tesla, because I do think they're going to continue going into the technological side of things. They're going to really try and push for that AI advancement. They're definitely going that route, and I do think they will be successful. So we'll just follow that. We basically see, in summary, their current valuation is premium priced. They're trading at a significant multiple compared to traditional automakers, reflecting that status as a tech growth hybrid rather than that pure auto company. That being said, the stock has declined 38% in 2025, basically alongside all the other, like a lot of kind of different stocks coming down. Nvidia came down quite a bit. We saw Palantir, all these companies going on insane runs and then going on 30 to 50% retracements. So we need to look and see if there's opportunities in the markets, but we're going to continue on talking a little bit more about the fundamental case behind Tesla here. So we're going to talk about the tariffs, this new 25% tariff on automobiles and auto parts not made in the US, subject to a 25% increase. So Tesla, although less impacted than a lot of its peers, it still produces they still produce a lot of batteries in China that they use to put in their vehicles made in the US. That being said, they are working at vertically integrating that supply chain and reducing their exposure in the foreign markets. So they're really ramping up battery production in the States as well as part production. So it could take a little bit of time before that is enough to kind of supplement what's being brought in from China and from elsewhere in the world. But it is important. They're less impacted. So at the end of the day, it's better than it's kind of the worst case scenario. There are ways they can kind of mitigate some of the effects of these tariffs just through supply chain logistics. So it'll be interesting. We'll continue following that going forward. So we also see China is expected to have retaliatory tariffs of China-made vehicles. So if they put a tariff on those vehicles exported to other markets, that could hurt that would hurt Tesla's overall sales, but their US sales would remain insulated. In Europe, we saw declining sales down 50%. I believe in China, we saw declining sales in Europe down 40%. In China, we saw sales down 50% last year. We see potential UE tariffs adding pressure, but that Tesla US-centric production definitely mitigates some of those global tariff risks. That being said, Elon Musk himself did say that they're not going to be immune to the effects of these tariffs. We see the Bank of America has cut its price target from $490 to $380, basically citing tariffs as that reason, creating significant risk to North American production estimates. We see domestic manufacturing advantage definitely suggests it's better positioned than other automakers, and we also see RBC is predicting that Tesla's China market share is going to have to 10% potentially due to this competition and tariffs. So in China, there's a lot more low-cost EVs available for people. The reason Tesla does so well in the West, in my opinion, is because for the cost, you just get a better product. Like, the technology that you're getting in a Tesla for the same price as any other EV right now, it's just kind of unparamount, and it just is that selling point. So all politics aside, the tech is there and it's much better than a lot of the peers, and that's why they have that advantage in the West. That being said, if you're in China and you have access to an electric vehicle you can buy for $10,000, or you have to buy the Tesla for $40,000, like, I know which one I'm buying every single time. So I'd love to see more competition in EV markets, bringing that price down. Tesla has previously said they were going to look to kind of really build out a low-cost EV model, which we haven't seen yet. So we do also see some analysts not really stoked on that either. Basically, overall, tariffs, mixed bag for Tesla, imposing some challenges in China and Europe, and offering a competitive edge in the US market where there's less disruption. Looking at forward guidance, they don't really explicitly offer too much forward guidance. We see Q4 2024 net income was $2.32 billion, but 2025 has seen weakening sales. As I said, China sales dropped 49.2%, so almost 50% year over year in February. European sales fell 40%. Global deliveries in 2024 came in at 1.8 million, below analyst expectations, signaling that slowdown. We see for 2025, analysts have also slashed their delivery forecasts from 2.3 million to 1.8 million cars, reflecting concerns over demand, as well as that competition from other EV makers such as BYD, Zeekr, and those delays in the low-cost EV model. So keep that in mind. We see, though, Tesla, although losing some market share elsewhere in the world, they are pushing into new markets. So they're going into Saudi Arabia in April 2025. So we'll see kind of how they're perceived there, how that launch goes. Definitely betting on that AI and autonomy. We see the Optimus robot and Robotaxi are definitely ambitious, but they're central to these bullish forecasts. So like Kathy Wood's target, it's pretty crazy. She says $2,600 by 2029. That's going to be heavily reliant on the success of the AI and autonomy side of the business. Short-term guidance is going to hinge on vehicle sales recovery because, as I said, none of the AI and kind of that stuff is going to be material revenues for quite a while. It's actually probably going to require them to invest a lot of money in that. So we could see no major updates on that low-cost EV. So some analysts not super excited about that. And then, so last but not least, in essence, Tesla's forward guidance is implicitly cautious for 2025. We've got flat to declining delivery growth expected amid kind of that tariff headwinds there. But there is long-term optimism around that tech-driven future. So that's a quick little overview of Tesla as a company. You know, we could get all into it, but I'm just going to thing is here. So we'll take a look, flipping to the charts, what we see. I'm going to look at our momentum indicators. First of all, we see coming down, you know, we did get into overheated nature right through here. We came down. We're starting to form a bottom on the weekly, curling back up. We can see the MACD coming just below the neutral territory. That red histogram slowing down, but you can see once we flip to that lighter red there, we still have some more consolidating to do. So just because, you know, we're getting into those more bearish territories, that it's going to just reverse right away. As I've said before, these indicators can stay oversold or overbought for extended periods of time, and then really, so we're paying attention to these to kind of gauge when the asset is cheap or expensive, and then we're looking at these two indicators down here to gauge the trend and the strength of that trend. So we look here, we've got our short-term bubble risk, looking in the blue here, so also coinciding with some other lows. So we're looking good in terms of those indicators chart on the weekly time frame. We'll get rid of a couple of these. Taking a look at our vortex indicator here. So what we want to see is that blue line curling back up towards that red line coming down. And then on our DMI, we see we're gaining a bit of bullish momentum here. We see the bearish momentum getting rejected by that ADX line. We want to continue to see that rejection. So I'll just pull it up right here. You see we tried to go out. We had this bearish cross right through here. We tried to break out. It didn't happen. Broke back below. So we want to see this continuing down and this blue line continuing up for that continued bullish momentum. On the weekly chart, we'll take a look just at the price action itself. I'll show you just kind of some things that I am watching. So we're taking a look. We see this trend line up through here, acting as support in through here, support through here, support through here. So if we come back to this trend line, there's a few levels, confluence of levels that I'm really interested in around here. You can see from this low to the high of this whole move, we came back, tagged that 786 Fibonacci level, and that's where the low actually occurred. So if we take the same move, same measured move with that Fibonacci, we see our 786 coming in right here at about $187. You can see the upsloping trend line just underneath it supporting it, and we've also got this horizontal support zone. If we drag it back across, you can see what I mean, acting as resistance, acting as support, resistance, support. So we kind of have just a lot of confluence of support in this zone in through here. So looking at that potential, that's that $210 down to $165, let's say. That zone is going to be a really decent opportunity to accumulate Tesla, in my opinion. Beneath that fair value target, that's going to be the accumulation entry. Also, though, we want to make sure that the markets are showing more strength. If we come down here, maybe we just chop and then end up, so we might come down, and then if we go down really fast, we might break below this 786 and come to this trend line. Otherwise, if we just kind of do a slower bleed, by the time we reach these lower targets here, this trend line, it actually ends up coinciding with that 786 a little bit closer. But that's why I have a zone here. I'm more interested in just DCAing in this zone. Spread your buys out, buy a little bit at the top of the zone, buy a little bit in the middle of the zone, and buy a little bit at the bottom of the zone. Get that cost basis in the middle right there. So we'll just flip over, though. Looking at the daily chart here, we can see we're still just stuck in this downtrend for now. We had kind of a lower time frame downtrend that we have broken out of, so we're trying to maintain this structure here, which looks pretty good for now. So if the stock market can show some strength, Tesla is a good candidate for an outperformer, in my opinion. We can kind of see we were just coming down, acting as resistance. We broke out, we held that higher low, we put in a higher high. So as long as we hold these lows in through here, that's like down to $233. That could be a good swing entry for Tesla. That being said, I just think the next target is bouncing up into this 50-day moving average with confluence of that downsloping trend line. So on the low time frame, trying to reverse that structure, currently putting in decent price action. We've got the one higher low, one higher high. So looking for that subsequent higher low. That could be a decent swing trade potential. We see a liquidity pool up here. It could be a decent target as well for for a bit of a retracement. If we do get this move, then you might look to enter your swing position here initially. If we get that breakout move, look for another subsequent back test and holding this area as support. So what I want to see ideally, if we see our 200-day moving average, let's say it's curling like this, and we see our 50-day moving average curling like this, that's ideally what I want to see for the continuation move. So I'll just make that orange for now, and I'll make this one blue just to make it a little more visible. So we have a little idea, just a thought process here. If we see price doing this, the swing trade could be that potential into resistance and then holding it up there, but ultimately also waiting for something to come back, retest these levels, and hold that as support, because that's going to be the actual signal that the uptrend is going to continue. if we see the 50-day curling up and holding it as support, similar to what we saw over here. So that's what I mean, breaking above, holding it as support, and then we're able to continue that move upwards. So looking for something like that on Tesla. As for now, you know, we still are a little bit overheated. We have stock market weakness, so the SPY down 2% today. Pretty crazy. This is what I talked about, breaking down from that bearish wedge, heavy rejection from the 200-day. This is not a good look. We see the VIX spiking here. So this is exactly what I was talking about in the video yesterday, is we don't want to see all these indices just getting slapped down from these key levels in downtrending price action with the VIX spiking aggressively. That's a big kind of warning signal in my opinion. So the stocks, I expect, as long as the market's going to continue down, stocks will follow it. That being said, Tesla is showing a little bit more relative strength than some peers, and it is holding this uptrending price action, so could be a bit of a swing trade opportunity. So we'll take a look at the indicators on the daily as well, see what they look like. So you can see daily losing momentum. You see we did get that bullish cross rate here in terms of these two, our vortex indicator, but we did also get a bearish cross on the DMI. So although we did get some bullish momentum showing here, our DMI shows a little bit more in depth kind of how strong that trend is, just with that additional moving average as a signal. So though we are getting a little bit here, I think we're probably just like this where we saw the blue break back above, you know, we could just see that. So continuing to follow these, but looking overheated on the daily chart there, as well as the 4 hour. So kind of actually a little bit overheated slash neutral in terms of the 4 hour. So it doesn't look amazing, not a great setup in my opinion. We're probably going to come back and fill this gap right through here. That often happens. That's why I think, like, you know, we're probably going to come back around 250 in the least, watching that as a potential. We did see a pretty nice little volume uptick on the daily chart, I believe. Yeah, right through here. So we basically went in this big downtrend. You see volume, you know, big buying volume in through here. That's our uptrend, and then kind of volume flattens out. It's just mixed, some sellers, some buyers, you know, lots of sellers right through here on that major dump, and then you start to see the buyers step back in. So the buyers here stepping in, and then you see that volume uptick right in through here. So that's definitely good, what we want to see. Continued volume follow through from the buyers for that strength, and then yeah, we want to definitely come and break some of these moving averages. It's not uncommon to get rejected from that 200-day on the first attempt as well. So just following that, the key thing we're going to look for, regain these key moving averages. You know, this could be a riskier swing trade potential if the momentum indicators reset. That being said, you know, if the stock markets look like they're in kind of that continued downtrending price action, then I don't think many stocks are going to be safe from that correction. So we need to really be following kind of all the markets and not just the stocks. And then, but we're going to pay attention to the ones showing relative strength. As I said, once the SPY looks like it wants to bottom or reverse, then we're going to try and find the best positions in the assets showing good relative strength. So Tesla is definitely up there. If you're looking at a potential to accumulate it, you know, or a DCA potential, you know, I would say this gap right here, if you already have a position in Tesla and your cost basis is not too bad, or it's close to the current price or something like that, maybe your cost basis is higher, you know, in here, in this gap fill isn't the worst place to DCA. Definitely looking for that target closer down to the 786 here, so 236, and then also within this 786 to 618 zone is also pretty good high time frame opportunities. So if we go under 250, could be a good opportunity to add to your Tesla bag if that's within your risk profile. Me personally, I'm just looking to kind of enter positions in size. I might take a little bit of a swing trade on Tesla. I will keep you updated on that if I decide to go that route. That being said, I continue to sit on my hands, wait patiently, and let the market tell me when it makes sense to enter. So thanks so much for watching, guys. If you learned something new, please share, subscribe, like. It all means the world to me, and I'll see you in the next one.